So now we'll be moving on to your next topic in your second chapter, that is cost of capital, that is cost of redeemable debt. Okay, now under your cost of redeemable debt, your cost of redeemable debt is the rate of return which the lenders expect. Okay, basically the redeemable debt is the rate of return which the lenders are expecting. Now who are these lenders? The people who are lending you money for your particular business. Now when the debt is issued to be redeemed after a certain period during the lifetime of a firm, such debt is called redeemable debt. Now this particular debt is redeemed, okay, during the lifetime of the particular firm, and that is why it is known as the redeemable debt. Okay, the cost of redeemable debt capital is calculated by using this particular formula, that is KD is equal to 1 open brackets 1 minus T plus 1 divided by N open brackets P minus NP the whole divided by half open brackets P plus NP. Okay, I hope the formula is clear. Now let's look into the new concept here. Now P is your payable on maturity. P is payable on maturity. Okay, NP is the net proceeds, N is the number of years to maturity, T is tax rates, and I is interest. Okay, now let's move on to the particular problem. Let's look into this illustration. Now illustration 19. In illustration 19, a company issues 50 lakhs 10% redeemable debentures at a discount of 5%. 50 lakh 10% redeemable debentures. Now when it is saying redeemable, this is the formula you need to take. Okay, redeemable debentures at a discount of 5%. The cost of flotation amount to 1,50,000. Earlier, your cost of flotation amount was not given directly in the previous problem, right? If you were aware, here the cost of flotation is directly given to you. Now, the debentures are redeemable after 5 years at par. N is also given to you. Now, the tax rate is 50% and calculate the cost of debt capital. Now, let's solve this particular problem. Okay. Now, in order to solve this particular problem, let's take down the formula. Illustration 19. Okay, in illustration 19. Now, what is the formula? KD is equal to 1 open brackets. KD is equal to I open brackets 1 minus T plus 1 by N P minus NP the whole divided by half open brackets P plus NP. Okay, and close the brackets. Now interest. Okay, now what you have to calculate, T is already there. T is nothing but 50%, that is 50 divided by 100. Okay, 50 divided by 100 will give you 0.5. Okay, 50. Now your interest, calculation of your interest. The company is issuing 50 lakhs, right? 50 lakhs 10% redeemable debentures. So 50 lakhs 10% debentures, that is 50 lakhs into 10%. Lakhs into 10% is 5 lakhs. So your I is 5 lakhs. Now N is given to you. N is the number of years. Before you calculate your net proceeds, just calculate all the short things that you need to do it ASAP. Okay. Now N is your 5 years. Now let's calculate your net proceeds. Now how will you calculate your net proceeds? It says 50 lakhs 10% redeemable debentures at a discount of 5%. Okay, 50 lakhs. 50 lakhs is is already given to you. 50 lakhs 10% debentures which are redeemable at a discount of 5%. Now discount is 5% discount. 50 lakhs into 5%. Okay, so 50 lakhs into 5%. To 5% is 2,50,000. Now we would have also calculated the cost of flotation to deduct, but the amount is already directly given to us. It says 1,50,000. Okay, take down cost of flotation. Please mention every detail that is given to you in the question. Cost of flotation is 1,50,000. Now how will you calculate your net proceeds? It is 50 lakhs minus 2,50,000. Why are you deducting 2,50,000? Because it is discount. If it was premium or something like that, we would have added, but cost of flotation and your discounts will be deducted. 2,50,000 minus 1,50,000. 50 lakhs minus 2,50,000 minus 1,50,000 will give you 46 lakhs. Net proceeds is 46 lakhs. Okay. Now substitute this in the formula. Okay. Now your I which is given to you is, no, well, let's substitute this particular thing in the formula. So as per the formula, your I which is given to you is 5 lakhs. Okay, KD is equal to 5 lakhs in open brackets 1 minus 0.50, open 1 by n is nothing but 1 by 5, open 50 lakhs is your principal. See, we forgot to mention here 50 lakhs, it's already given in the question. 50 lakhs is your principal. Okay, principal minus your net proceeds is 46 lakhs. Okay, 46 lakhs to the whole divided by half into your principal is again 50 lakhs plus 46 lakhs your net proceeds. Okay, solve part by part now. Okay, so 1 minus 0.50 is 0.5. 50 lakh into 0.5. Sorry, 5 lakh into 0.5 is 2,50,000. Okay, see, solve part by part. Okay, first solve this particular bracket, that is 1 minus 0.50 into 5 lakh will give you 2,50,000. Okay, plus 50 lakh minus 46 lakh. 46 lakhs into 1 divided by 5 will give you 80,000. Okay, 80,000 to the whole, because this is 1 by 5, right? To whole divided by 50 lakhs plus 46 lakh into 1 divided by 2 is 4 lakh 48 lakhs. Now 2 lakh 50 plus 80,000 divided by 48 lakhs is 0.06875, or into 100 as usual. To find out the percentage, it is 6.875 is your answer. Okay, I hope it is very clear to you all. This is how you find out your a solution under redeemable debt. Now let's move on to your next solution. Next illustration, which says a company issues debentures of 2 lakhs and realizes 1,96,000 after allowing 2% commission to the brokers. Here you have commission also. Debenture carries interest rate 10% and the debentures are due for maturity at the end of the 10th year. Calculate the effect of cost of debt capital after tax if the tax is 55%, and this is the solution. Now it is saying it is a redeemable debenture and it is asking you to calculate after tax, right? Because it is debentures which is carrying interest. Now everything remains the same. Okay, everything remains the same. Substitute in the formula form of formula, but your tax rate again 55 divided by 100 is 0.55. Everything is the same. Just calculate the net proceeds. Net proceeds is already given to you. It says it is realizing, so you're not going to take 2 lakh as your amount. You're taking the realized amount, that is 1,96,000. That will be your net proceeds. Everything is given to you directly here. Now for your interest it says your debenture is 10%, right? So 10% is, you will take 10% of 1,96,000 into 10%. Sorry, just a minute, girls. Just a minute. Okay, interest will be taken on the actual value, that is on 2 lakhs. 2 lakhs into 10% will give you 20,000. Okay, only net proceed will be your realized value, because why you're taking your realized value is because in your net proceeds you take into consideration your discounts, your premium, your any flotation cost. Only after that you deduct, you add, and then you calculate your net proceeds, right? So for your net proceeds you will be taking the realized amount, whereas for your principal amount you'll be taking 2 lakhs which is directly given, and you will also be calculating interest on the same amount, that is 10%, and similarly substitute in the particular formula. Okay, now let's move on to your next topic, which is cost of retained earnings. Cost of retained earnings, cost of internally generated funds. Now internally generated funds, okay, it says retained earnings are one of the sources of finance. Okay, retained earnings are one of the sources of finance for investment proposal. It is different from sources like debt, equity and preference shares. Cost of retained earnings is the same as the cost of An equity fully subscribed issue on addition of shares, which is measured by the cost of equity capital. Cost of retained earnings can be calculated with the help of the following formula. That is nothing but KR is equal to KE into 1 minus T, 1 minus B. Okay, close the brackets, open the brackets, 1 minus B. Now, KR is the cost of retained earnings, K is the cost of equity, T is the tax rate, and B is the brokerage cost. Okay, now the only difference here is you will be getting a brokerage cost. Okay, now it's look into the illustration after seeing the formula. It says a company's KE is 20%. Okay, company's KE is 20%. The average tax rate of shareholder is 40%, and it is expected that 2% is brokerage cost. Okay, that shareholders will have to pay while investing their dividends in alternative security. What is the cost of retained earnings? KR is equal to KE. KE is already given to you. It is saying 20%. Okay, and tax rate is also already given to you, and brokerage is also already given to you. Substitute in the formula and find out the solution for the same. Okay, I hope this particular concept is very clear to you all. Now, let's move on to your last topic in this particular chapter, that is weighted average cost of capital. Now, under your weighted average cost of capital is nothing but it is the expected average future cost of funds. Okay, it is this particular cost of fund is expected over the long time running of the particular business. Okay, based on the capital which is being invested in the company. Now, the computation of average cost of capital KO involves the following steps. These are the steps that you need to take into consideration while calculating the weighted average cost of capital. Firstly, assigning weights to specific cost, multiplying the cost of each of the sources by appropriate weights, dividing the total weighted cost by total weights. The weighted average cost of capital can be calculated with the help of the following formula. Okay, this is the formula to calculate. That is KO is equal to KD WD plus KP WP plus KE WE plus KRWR. Now, KO is the overall cost of the capital, KD is the cost of debt, KP is cost of preference share, K is cost of equity, KR is cost of retained earnings, WD is the percentage of debt of total capital. Okay, WP is the percentage of preference share to the total capital. It is preference share to total capital. W is percentage of equity to total capital, and WR is the percentage of retained earnings. Now, weighted average cost of capital is calculated also using this particular formula. Okay, that is KW, weighted average cost of capital. X is the cost of specific sources of finance, and W is weight proportion of specific sources of finance. Okay. Now, let's move on to your first illustration, that is illustration 1. That is your last topic under your second chapter.